first questions we often answer in a managerial accounting class is how much is it costing to make our stuff? We need to know how much it costs to make our stuff so we can sell it for more than that and have some gross profit. So let's walk through a job order costing example. This example will have 4 different jobs and it will have some indirect labor costs. In a manufacturing environment, we're going to take materials, labor, and overhead and move those costs into work in process. There we're going to apply the labor and the overhead to convert those materials into something else. When we're finished with them, they become a finished product and they hang out in our finished goods warehouse until we sell them. And hopefully we sell them for more than what it costs us to make them. It's going to be pretty easy to track the materials per job and the labor per job. We have systems in place for that. But indirect costs like a factory rent, like depreciation on equipment that's used on all the different projects, that's going to be harder. We're going to have an overhead application rate to apply estimated amounts of overhead to the jobs. Echo Ridge Homes manufactures prefabricated chalets in Colorado. Each chalet is a little bit different, so we have to keep track of the costs by chalet. During May, they buy materials for $440,000. They incur wages of $114,000. Some of that is direct labor. The rest will be indirect labor. They have some direct materials. We know that there's depreciation on the manufacturing equipment, and there's other overhead costs of equipment rent and prepaid insurance. And we're going to allocate overhead to the jobs at the rate of 60% of direct labor costs. During the month, we complete chalets 13, 15, and 16, and we sell chalet 13 for $97,000, and we sell chalet 16 for $146,000. So it's going to be easy to track direct materials, easy to track direct labor, but the indirect costs of overhead a little more complicated. And probably what happened is at the beginning of the year, Echo Ridge Homes sat down. They said their total estimated overhead for the year is going to be $600,000. They think that direct labor cost is a good driver. Those direct labor costs cause them to incur overhead costs, and they predict that that's going to have a total cost of $1 million. So $600,000 divided by $1 million, the dollar signs cancel each other out, equals 0.6, which is 60%. Our rule for allocating overhead to jobs is going to be 60% of the direct labor costs incurred on that job. Let's do some journal entries and track these costs as they go through our system. They purchased $440,000 worth of materials on account. So we're going to debit materials for $440,000 and credit accounts payable for $440,000. We're not going to worry too much about that credit. We're going to focus on what it costs to make our stuff. And so we've got $440,000 worth of materials that are in this materials warehouse, if you will, to be checked out by our employees. Let's skip over part B for now and go right to the materials. When our workers take materials to the job site, they sign them out. Let's say Ralph is in charge of that. So he keeps track of what materials went to which jobs. If you add all these up, you should get a total of $226,400. So we're going to move $226,400 out of materials into work in process. And simultaneously, we have job order cost sheets that track that stuff. So here are some job order cost sheets I made up. I made little notes to myself of what happens to these jobs, because what often happens to me is I get confused about which jobs got sold and which jobs are sitting in ending work in process and which jobs are just waiting to be sold. And you can see we posted the $41,700 of materials to job 13, $56,400 to job 14, etc. Now let's go back and do the labor. It tells us that the total labor is $114,000. We add up all these guys down here for direct labor, and we get a total for direct labor of $84,600. $114,000 minus $84,600 means that $29,400 is indirect labor. Supervisors. So we don't know what the supervisor is doing on any moment. She may be at job 13, she may be at job 14, she may be at job 16, she may be back in the factory, she may be checking out Ralph. So there's no efficient way to allocate her time to each individual job. So we'll call that overhead and apply it to our jobs using our rule, which is 60% of direct labor costs. So we've credited wages payable for the total wages we owe, and we've debited the direct labor to work in process and debited the indirect labor to manufacturing overhead. Just like we did with the materials, we'll post the labor costs to the individual jobs. For example, job 13 gets 14,800, job 14 gets 28,500, etc. Okay, let's take a look at overhead. We've already booked $29,400 of indirect labor. In this example, there are no indirect materials like small nails or screws, but there is that indirect labor of $29,400. We decided that was the supervisor's salary. But we've also got $6,300 worth of depreciation. So our journal entry for depreciation expense is debit depreciation expense, credit accumulated depreciation. Instead, we might debit manufacturing overhead, credit accumulated depreciation. So we're slowly building up a total here in manufacturing overhead. Next, we've got $10,500 worth of equipment rental. So let's debit manufacturing overhead and credit cash when we pay that rent. And finally, we prepaid some insurance. Let's use up $9,000 of that. So we're going to credit prepaid insurance and debit manufacturing overhead. I think our balance in our manufacturing overhead account is something like $55,200, but we're not going to transfer it all into work in process. We're not going to apply it all to our 4 jobs. We're going to use our formula, 60% of labor cost. So if our direct labor cost is $84,600, multiply that times 60%, and you get $50,760. So we're going to take $50,760, move it out of overhead into work in process, and we're going to use that same 60% rule to apply the overhead to individual jobs. For example, job 13 had $14,800 worth of direct labor. Multiply that times 60%, and you get $8,880 of overhead applied to that job. We could finish that job, so we can now total that job. And when we add the materials, labor, and overhead, you get a total cost of $65,380. Job 14 had direct labor costs of $28,500. You multiply that times 60%, you get $17,100 worth of overhead applied. That job is in ending work in process. We didn't finish job 14 in May, so we're going to leave a blank here for June's cost, and we can't total it because it's not done. Job 15 had $19,900 worth of direct labor times 60% means it gets allocated $11,940 of manufacturing overhead. We can total that job, and we get $93,840. Job number 16 had labor costs of $21,400. $21,400 times 60% is $12,840 of overhead. And because that job is finished, we can also total that job. So let's take the finished jobs, 13, 15, and 16, take them out of work in process and move them to finished goods. So we'll move over the jobs. Job number 13 was for $65,380. It moves over to finished goods. Job number 15 also got finished. It totaled $93,840, so we'll debit finished goods for $93,840 and credit work in process for $93,840. Finally, job number 16 was finished for $100,540. So now we've moved all the completed work out of work in process into finished goods. And what's our ending balance in that work in process account? Add up all the debits, subtract all the credits, you get $102,000. And that's our job number 14. Materials, labor, and overhead thus far are $102,000. All right, let's sell job number 13 for $97,000. Debit accounts receivable for $97,000. Credit sales. And let's take job number 13 out of finished goods and move it into cost of goods sold. So debit cost of goods sold for $65,380 and credit finished goods for $65,380. And just as we hoped, we sold it for $97,000. It only cost us $65,380, so we've got some gross profit. Now let's sell job number 16 for $146,000. So we'll debit accounts receivable for $146,000, credit sales for $146,000, and we'll debit cost of goods sold for 100,540 and credit finished goods for 100,540. After we move jobs 13 and 16 out of finished goods into cost of goods sold, what's left is 93,840, which is the total cost of job number 15. Materials, labor, and overhead total 93,840. One last piece of business. In this manufacturing overhead account, we had total debits of 55,200 and total credits of 50,760. So it's under applied this month. We incurred more overhead than we applied. Perhaps next month it'll be over applied and it'll all even out. But anyway, in any event, at the end of the period, if it's a small enough number down here, either debit or credit, we'll close that into cost of goods sold. If it's a big enough number, we'll sprinkle some of it in cost of goods sold, some of it in finished goods, and some of it work in process. And that's all there is to job order costing.